Hello, in this video I'm going to be talking about confirmation number 2, which is confirmation by absorption. You can see that absorption on the order flow software, on the footprints, and I don't really recommend trading it as a standalone strategy, but it is excellent confirmation strategy. So let me first show you what it is all about. Let me draw you a little picture. So imagine there is a resistance zone which you found, for example, using the volume profile, and imagine that the price is moving towards this resistance zone. Now it hit the resistance zone and you are waiting for a confirmation. Now if in this resistance zone there is high volume node, and in that high volume node there is big number both on bid and also on ask, then it's the absorption. What happens is that buyers who are pushing the price upwards, and they are still pushing the price upwards, they are wanting to move the price higher with market orders. But in this resistance, there are strong sellers who absorb all that buying activity. So they sell to all of those buyers who want to buy at this price level. And because of this, the price doesn't shoot higher, but those aggressive buyers get absorbed. And what happens is that the price turns and goes downwards from that resistance. So this is the confirmation, the absorption. You're looking for a high volume node which has big volumes on both sides of the footprint, so heavy volumes on bid as well as heavy volumes on ask. Alright, the buying pressure got absorbed and the buyers ran out of fuel and sellers took over in here. Alright, so that's the confirmation on the resistance zone. Now imagine a long trade scenario. Imagine that this is a support zone, which you also find, for example, using volume profile, order flow, or price action. It doesn't really matter. This is the support zone which you want to trade if it is confirmed. The price is moving downwards, hits the support zone, and in that support zone you want to see the confirmation. Now there is a high volume node with heavy volumes on bid and also heavy volumes on ask. The sellers who are pushing the price downwards get absorbed. Buyers at this price level are willing to purchase all those contracts, all those volumes the sellers are selling. So the selling pressure gets absorbed, the sellers run out of fuel, and what usually happens is buyers take over. Alright, which means price turns and goes upwards. This is the logic behind this setup. Big guys or the big trading institutions absorb all the buying or the selling pressure. Now how you can tell that they absorbed this pressure is because high volume node in here or in here. A high volume node like this, which got created in a support or resistance zone, that's the absorption. Alright, so in this case it's a little bit easier than the confirmation number 1 using limit orders, because in this case you don't really need to think where the limit order needs to be, whether it needs to be on bid or on ask. In this case you want to see huge number pop up in here and also in here, on bid as well as on ask. This is how it can look like. This is buying activity absorbed. So imagine buyers are pushing price upwards. Then there is this high volume node. As you can see, there are huge volumes both on bid and on the ask. And this absorbs all the buying pressure, all the buyers, and from that place the price goes downwards. Alright, buying activity of those buyers got absorbed mostly in here. Now this is a selling activity absorbed. Price was going downwards in here, Then this high volume node got created. As you can see, there's a huge number both on bid and also on ask. And from that place, buyers took over because the selling activity got absorbed. Alright? Sellers ran out of fuel. The buyers just bought it all at this price level, and then they pushed the price upwards. Now, what is a big volume signaling absorption? There are 3 rules to tell you that, to help you identify the heavy volumes signaling absorption. Those rules are the same as from the previous video, the confirmation number 1, the limit order confirmation. So I'm just going to run through it real quick. Rule number 1, the most important rule: the order which you are looking for, the absorption volume node, is bigger than usual order. So if you look at this picture, then the price was going downwards, it got absorbed in here, and then went upwards. And if you look at those numbers, 203 and 493, you can immediately tell that it's way bigger than the average, right? So if you look at those footprints, for example, then those volumes in here are way above the average. This is the most important rule, rule number 1. If you are new to this, just stick to this rule number 1 and you should be fine, alright? But there are also the rules number 2 and 3 which you can follow when you are a little bit more experienced. The rule number 2 says that every instrument has their usual order volume different. So for example, those volumes which you can see here would be sort of normal volumes for the Euro futures. But if you went, for example, to the ES, Standards and Poor's Index futures, then those numbers would be way higher. So every trading instrument has the usual order volume different, alright? So you need to keep that in mind. It's always best to start with one trading instrument, get feel for it, learn to trade it, and only afterwards start with another one. Now, rule number 3, different time of day or different time of sessions has different average order size. So as you can see in here, those volumes were created at the beginning of the European session. If this was the US session, then this kind of volumes probably wouldn't be as huge as it is when it appears in the European session. Alright, so you also need to keep that in mind. Now let's move forward. This is also pretty similar to the info which I showed you in a previous video in the confirmation number 1. This additional info. This is where I look for the absorption. For the absorption confirmation, I look for it on 5-minute chart and also on a 30-minute chart. You need to keep in mind that big order on 5-minute chart is usually smaller than a usual order on a 30-minute chart. Now the order doesn't need to appear all at once because of the icebergs. So for example, in here, this high volume node could be created like there could be 20 on bid, 20 on ask, then another 20 on bid, 20 on asks, and it would continue like that until the bid was 203 and the ask 493. And this could happen within, for example, half an hour or 15 minutes. Alright, so this is the iceberg order. Big trading institutions like to trade like this, so their volumes don't appear all at once, and with this they sort of want to mask their intentions and what they are doing right now. But in the order flow we can track them pretty easily, so in the end we will see that there is a huge number and that the market is most likely to turn. Now again, as in the previous video, you don't need to watch the order flow all the time. You only need to watch it around support and resistance zones. So imagine that this is a support zone. You have some alert, for example, in here. When the price is getting near the support, you get a signal from the alert, you open up the order flow, the price goes slower, and in this area you are waiting for the confirmation. In this area you are waiting for something like this. Alright, so let's now have a look at some examples. I already used this one in the previous slide. The price was going downwards. Imagine that there was a support. The price hit it. Then this high volume node appeared with huge numbers on bid as well as on ask. This looks like the absorption. The sellers who are pushing the price downwards got absorbed by the buyers who want to buy in here. So the buyers started buying at this price level, and this is the signal for you to go long. As soon as you see big numbers jumping in around your support level, you press the buy button. Alright? Now this chart shows the Euro futures, a 30-minute chart. Imagine that there is a resistance zone somewhere in this area, and in this area you're waiting for a confirmation. So the price is moving upwards, and suddenly you see this high volume node, 369 and 378. This is an absorption. The buying pressure gets absorbed. Sellers won't let the price to go much higher, only a few ticks, and then the price turns and goes into selling activity. So this is the absorption. As soon as you identify that heavy volumes are jumping in, that the sellers are absorbing buyers, you go short. Alright? This example is also Euro futures 30-minute chart. In here it's very nicely visible. Price is pushing upwards. Let's say that there is a resistance zone somewhere in this area, and in this area you are waiting for some sort of confirmation. And this is the kind of confirmation you want to see. Unusually big volumes created in your resistance area, both on bid and ask. This is the absorption. This high volume node indicates that the buyers who are pushing the price upwards get absorbed, and sellers taking over and pushing the price downwards. What's also pretty nice in here in this example are those selling imbalances. So what happened is basically sellers taking over in here, absorbing all the buyers, and then this is the aggressivity of the sellers. Aggressive sellers pushing the price downwards. Alright, those imbalances. Another nice confirmation of the level. Now this is also the Euro futures, and if you look at the time, then you can see that this is the peak hour, this is the overlap where the European session overlaps with the US sessions, so the volumes within this overlap are usually heaviest, at least with the Euro futures. Now let's say that there is a resistance somewhere in here and you are waiting for a confirmation. The price is pushing aggressively upwards. You can see all those imbalances, all those buyers pushing the price upwards. But in here, clearly, sellers are waiting, wanting to sell. If you look at the volumes, there are pretty massive volumes all over this area. For example, in here, or in here, or in here, those are high volume nodes, and it signals that the sellers are absorbing all the buying pressure from here, and that the price is not really likely to continue in the buying activity. So as you can see, after some time, the sellers absorbed all the buying orders, the buyers ran out of fuel, and the price went downwards. So somewhere in this area would be a good place for a short, after you saw that unusually big volumes both on bid and on ask are traded here. When you see that, when you identify that, you can immediately press the short button. Alright, now let's have a look at another example. This is 5-minute chart on the 6E Euro futures. As you can see, the volumes are not as heavy as in the previous case. The reason is mostly because we are on 5-minute chart. The price was going downwards. Then let's say that there is some support in here and you are waiting for some confirmation within this support zone area. Now, here is a nice example of the absorption. 133 on bid and 152 on ask. If you look in here, then you can see that the 133 and 152 are pretty huge numbers compared to the volumes in footprints which got created before that. So that's how you can tell that this is unusually big number, way above average, and it appeared in here in your support zone. So as soon as you see unusually big numbers to appear in here, you go long. This is the absorption. Heavy volumes on bid as well as on ask. Now in here the volumes are way bigger. This is the ES futures for Standard & Poor's Index 500. It is a 5-minute chart. Imagine that there is a resistance somewhere in this area, and when the price hits this resistance, you want to see some confirmation. You want to see heavy volumes created both on bid and on ask. You can see that right here, this high volume node, also this high volume node in here. Unusually big numbers if you compare it to the rest of the others in those footprints. Alright, and the important thing is that those volumes got created in the resistance zone. As soon as you see that, as soon as you identify the absorption, you can enter your short. You can enter it from here, or you can wait a bit and enter from here 5 minutes later. As you can see, this is pretty similar to the previous confirmation strategy, to the limit order strategy, only it's a little bit easier because you don't need to think where the heavy volumes need to be, because they both need to be on bid and also on ask. So it is a bit easier. Anyways, this is another example, also the same chart, also the ES 5-minute chart. The price is going upwards. Imagine that this is a resistance zone which you created, for example, with a volume profile or with order flow. And in this resistance zone, you are waiting for some confirmation. When you see it, you can enter your short. Now in here, this high volume node is a very nice case of absorption. If you compare those volumes to the rest of the volumes in this area, you can tell that those volumes are way above average. So most likely the buyers who are pushing the price upwards get absorbed in here by the sellers. The sellers absorb all the buying pressure and then push the price downwards. Now there is one more interesting thing to notice. If you look at delta in here and in here, those are buying footprints, those two. The price is moving upwards, but delta is negative. Usually when the price is moving upwards, the delta should be positive, like in here. You see, price moving upwards, delta is positive. But in here, price is moving upwards, but delta is negative, which is sort of weird. What this means is that price is moving upwards, but sellers are entering their selling positions in the up move. All this stops with this high volume node. As you can see in this footprint, the delta is positive but very close to zero actually, and then there is the sell-off. The price simply wasn't able to continue upwards, sellers took over, and the breaking point was this high volume node. Now another example, this is Euro futures, 5-minute chart. Imagine that there is a support somewhere in this area. Support you created, for example, using volume profile. Price is moving downwards, sellers are pushing the price downwards, and in here the sellers got absorbed and the buyers won't let the price drop lower. They start buying and the sellers are not able to push the price lower because the buyers are buying at this price level. They're holding it, absorbing all the selling pressure, and when the sellers run out of fuel, the price simply turns and goes upwards. Alright, so this is the absorption. Now, those are massive volumes. Massive volumes on the ES. This is the futures for SP500, the ES. 5-minute chart. Strong buying pressure. And in here, with those massive volumes, buyers are absorbed. There is the absorption in this area. Heaviest volume node. The heaviest volumes are created in here. Over 5,000 contracts on bid and also over 5,000 contracts on ask. This is the breaking point. This is where the sellers start to sell, absorbing all the buying pressure. Buyers run out of fuel and sellers take over, reversing the price and pushing it downwards. There were some huge volumes in here. If you compare it to the rest of the footprints, you can tell how massive this action in this area was. This is definitely an important turning point. Now this is actually pretty similar to the previous case. It's the same chart, only in this case price is going downwards, and in this area there is the absorption. Buyers start to absorb the selling pressure. Don't let the price move too much lower, only a few ticks in here, and then trend turns and there is a buying activity. All the selling pressure got absorbed in here. As you can see, also over 5,000 contracts on bid, over 5,000 contracts on the ask. This is the breaking point, and from that the trend changes. This is also the ES, also 5-minute chart, but in this case the volumes are not so heavy, so I would say that this was a different trading session. Imagine that there was a strong support somewhere in this area and you wanted to go long from there if there is the confirmation. So the price is moving downwards. There are heavy volumes in here, but they don't really matter because they did not get formed in a support area. So price continues to drop, but in this support area which you want to get confirmed, this high volume node appears. Over 1,000 contracts on bid and over 1,000 contracts on the ask. This is way above average in this trading session. So when you see this, you should be aware that this is unusually big number, both on bid and on ask, and that this is most likely the absorption. So the buyers are absorbing all the selling pressure and eventually turning the price. Alright, so as soon as you see huge numbers to appear in here, you immediately go long. This example is also the ES 5-minute chart. I would say that this is also not in the peak hours because of the volumes. Let's say that there is a resistance somewhere in this area, which you created, for example, using the volume profile. The price goes upwards. Then high volume node appears in here. Heavy volumes, way above average, start to appear both on bid and on ask. And this is the signal you are waiting for. This is the signal to go short. Alright? Buying pressure getting absorbed in this area. Now another example is the ES 500 5-minute chart. If you look at the time, then this is the end of the New York session, and sometimes pretty massive volumes got traded there. It is also this case. So imagine that there was a strong support created, for example, using the volume profile. There was a selling pressure, and you are waiting for some sort of confirmation. In here, there really wasn't any, but in the next 5-minute footprint, in this one, massive volumes started to appear in here, in this area. The heaviest volumes in this high volume node, over 3,000 contracts on bid and also over 3,000 contracts on the ask. So this is sellers pushing price downwards or trying to push the price downwards, and buyers absorbing the pressure. And when all the pressure gets absorbed somewhere in this area, mostly in this area, then the trend changes and the price goes upwards. Alright, this whole area is the absorption. The most important place from this absorption is this high volume node, because the heaviest volumes within this whole area got traded right there in this high volume node. Now this is the Australian dollar futures, a 5-minute chart. So the volumes are going to be significantly lower in here. Also the volatility is way lower. So imagine that this was a resistance. In this resistance, in this zone, you want to look for some confirmation to go short. Price is moving upwards. And then this high volume node appears. 133 contracts on bid, 132 on ask. Those volumes are way bigger than the average in all those previous footprints. So this is a sign of absorption. And as soon as you see that formed in that resistance zone area, you go short. Now this is the last example. It is on the 6E, which is Euro futures. It is a 30-minute chart. Price is moving downwards. Imagine that somewhere in here there is a support area. In that support area, you are waiting for some confirmation to enter a long trade. So there is this high volume node, heavy volumes both on bid and also on the ask. Also in here, this is also a pretty significant volume node, because there were also pretty massive volumes in here. So as soon as you see this, then this is sign of absorption, because there are heavy volumes both on bid, also heavy volumes on the ask. And from that place, the price turns. This is the breaking point. The sellers run out of fuel and buyers taking over. All right, all the selling pressure got absorbed. So that's for the absorption setup. It's pretty similar to the limit order setup. I like to use them both. When there is a support or resistance zone and there is either the limit order setup or the absorption setup, I like to use those as a confirmation to enter my trades. Alright, so that's for this video. Thanks for watching, and I'll see you in the next one.